Welcome back to opinionsofree.com. It's a site where you can leave your opinion on various topics, including the one I'm going to introduce today, which is whether or not a 10% rate cap on credit cards is at all feasible. Now, this is a proposal put out by the American president, and we'll just look at some of the numbers here. Now, interesting is I put a post on a certain social media platform about this, and it didn't take too long for it to deteriorate into the usual pointless and ridiculous comments. It seems that people these days, their arguments are limited to telling you who they hate or like or really hate and what this person is, and putting labels on individuals. And most of those labels are words that are used well out of context. And I wish those who would use certain words would at least buy a dictionary or thesaurus, and maybe understand the context in which they're using those words so they can realize that they're actually talking out the backsides. In any case, opinionsofree.com, you can leave your comment on this topic coming up. Now, I'm going to read off of a point page here because I don't want to for this to go on too long. So is a 10% cap feasible, and will it be positive for consumers? Let's look at a few things here. If you understand compound interest and the rule of sevens, you know that if you have a 7% rate of interest on your investment, any investment at all, you will double your principal in about 7 years. It's because you're making interest on the interest. Now, compared to simple interest, that would be about 14 years. So you see the power of compound interest is incredible. And that's why so many who have money will continue to make money, because they have a interest earned on the interest rather than it being eaten away by debt. And debt is the destroyer of economies. And I think you all know what's happening there, how, for the most part, our society is being split into those who cannot repay their debts and those who are making profits on their assets. And I'm not trying to pick good or bad here. I'm just saying that's growing. And actually, that's also changing, that a lot of the money is going towards a smaller group, because the power of compound interest can also eat away at your savings. You know that if you have a 7% rate of interest on your debt and you don't pay that back, you will double your debt in 7 years or so. Now, when an institution is issuing a debt, they don't typically wait 7 years to get their money back. If you don't pay back a certain point, you have a default, and what they'll do is try to get back whatever they can, sue you, whatever. And when they cannot reclaim that debt, they write off that debt against earnings. Okay. Now, when that happens, the institution isn't paying as much tax on earnings, capital gains, call it what you want. And as a result, the write-off is spread among the taxpayers in the way of a bigger national debt, because that goes into a pool of debt that the whole country is paying for. And also it's spread among the interest rate paid on credit cards by the people who do pay off their debt, because that loss is weaseled in there and it's split. What part goes into the interest rates charged and a part is written off. Whatever is statistically better for the institution in order to make sure that it can minimize its losses, increase or maximize its profits, keep the share price up, keep people happy, keep investors happy, keep your 401k or your TFSA stronger, because otherwise they run into legal problems, right? So we talked about recouping debt. Now, in order to really know if a 10% cap is beneficial or detrimental, you have to split all the users into subgroups. So I'm going to use 4 subgroups here. Let's say that you have a subgroup that makes $50,000 family per year. And that may not seem like a lot to some of you, but there are families that earn $50,000 or less per year. And either in the US it's 50,000 US, in Canada it's 50,000 Canadian, in England it's 50,000 pounds. I'm just using a round number there. Then you have those that make from 50,000 to 100,000, those that make from 100 to 200,000, and groups above that. Now, the thing is that when you put a 10% cap on credit card charges, those who will benefit the most are those who don't need the cap. Because anyone who pays off their credit card balances doesn't care if it's 10% or 25%. They're paying it off. It doesn't matter. And those that cannot pay off their debt, their cap, are going to benefit to a degree, depending on how low that rate is. and whether or not they go and stupidly put on more debt. Now, the reality is, if that gives them a cushion to put on more debt that they have to put on because they need it to live, then you're creating a bigger debt pool. And you're just charging less for the debt pool. So you have, let's just say hypothetically, someone who owes $30,000 in credit card debt, and at 23%, there's no way they can pay that off. It's dropped down to 10%. Logically, if they can pay that debt off, they can get back into maybe an asset saving situations. But if that 23 is all they could have gotten at their credit limit, and if the credit limit, let's say, is now a little bit more expansive because of the lower debt, and they can get another $10,000 or $1,000 of debt on there because they need it in order to buy food and stuff and pay for the car and get to work, then you're expanding that debt among that group of people. And if they couldn't pay it off at 23%, paying off a larger amount of 10% may not actually make any difference. So the numbers may actually equalize. So there's always a danger that you're actually creating more debt. But asset and debt education is important, and we just don't get that. You can go all over the place on YouTube and take some courses, but this should be taught in schools, right? But let's get back to for a second now. Those that can afford to pay off the principal are not going to care if interest rates drop down to 10%. Okay, they will only care if that somehow minimizes the earnings they're going to make on any stocks. Okay, because they're buying stocks from the bank or the institution, they want those stocks to go up in value. And if there's any pressure on those, they will of course complain, saying that you're eroding the value of the stock market and eroding pensions and eroding the 401ks and eroding the TFSAs and whatever, depending on where you are and whatever country you're in. So you can see that by dropping it down to 10%, you're actually creating all these hurdles that have to be addressed. And it's not simply just a question of dropping it down to 10% of the world would be good. So that's my view, that dropping it down to 10% will be beneficial for some, would be detrimental for others, unless you look at the entire system and understand who's not able to pay off their debt, why they can't pay it off, and how you can perhaps make it easier for them to pay off their debt so they can get out of this perpetual debt situation, like debt slavery, without necessarily hurting other people who are paying off their debts and in a sense don't want to be punished because you're trying to deal with helping one group of people at the detriment of another group of people. Okay, so listen, you're going to have your opinion. I appreciate that. It doesn't matter whether you agree or don't agree. The point is I'd like to hear your opinions. So go on to opinionsarefree.com and find this particular topic. Is a 10% cap feasible or detrimental? And leave your opinion on that. And you don't have to leave your last name, just your first name and your community or where you're from, what country you're from, and no one's going to bug you. Opinionsarefree.com, and please like the page, and also if you could please subscribe. I'd love to hear from more of you and help this expand internationally. All right, have a great day. Bye-bye.